Is the stock market going to crash in 2024? A question that has been on everyone's mind lately. As we stand at the threshold of this year, the stock market's health is under scrutiny. The threat of economic instability looms large, and political tension around the globe adds to the uncertainty. Are we on the brink of a financial meltdown, or is this just another bump in the road? Today we dive into the depths of this question and try to find some answers. Before we begin, it's crucial to understand the current state of the stock market. As we stand at the brink of 2024, the market landscape is a mixture of optimism and caution. The stock market has shown impressive resilience over the past few years, bouncing back from the turmoil of the pandemic and reaching new heights. Let's take a closer look. The tech sector, for instance, has been a powerhouse of growth, with companies in artificial intelligence, cloud computing, and biotech leading the charge. On the other hand, traditional industries such as manufacturing and retail have faced challenges, grappling with supply chain disruptions and changing consumer behavior. Across the board, however, one trend is clear. Volatility is the new normal. Market fluctuations have become increasingly common, driven by geopolitical tensions, economic uncertainty, and the rapid pace of technological change. This volatility has led to a roller coaster ride for investors, with soaring highs and sharp drops. What does this mean for market stability? Well, opinions are divided. Some experts suggest that the market's resilience points to underlying strength. They argue that the economy is fundamentally sound, bolstered by robust consumer spending and corporate profits. Others, however, warn of a potential bubble. They point to sky-high valuations, particularly in the tech sector, and caution that the market could be overheating. In addition to these divergent views, there's also the question of external factors. The ongoing geopolitical tensions, the potential for inflation, and the unpredictable nature of the pandemic are all wild cards that could sway the market in one direction or the other. So, where does this leave us? The current state of the market can be described as a balancing act. On one side, we have strong growth and resilience, and on the other we have volatility and potential risks. It's a complex, dynamic landscape that requires careful navigation. With this understanding, we can now examine the potential for a market crash in 2024. Predicting a stock market crash is no easy task, but there are certain indicators that experts look for. Let's delve into what these markers are and how they might hint at what's coming in 2024. Firstly, inflated stock prices often serve as a red flag. When the price-to-earnings ratio of the overall market reaches historically high levels, it may suggest that stocks are overpriced relative to their actual worth. This overvaluation can create a bubble, and as we've seen in the past, bubbles eventually burst. Secondly, significant changes in economic policy can trigger a market downturn. For instance, if the government decides to increase interest rates abruptly, it can cause a ripple effect throughout the economy. Higher interest rates make borrowing more expensive, which can slow down business investment and consumer spending, thereby affecting the stock market. Another indicator is market volatility. A stock market with frequent and large price swings, both up and down, could be a sign of instability. This instability might be a precursor to a larger-scale downturn, or even a crash. Now let's turn to expert opinions on these indicators and their relevance to 2024. Some financial analysts argue that we are currently seeing inflated stock prices, especially in the tech sector. Others point to potential policy changes in the wake of recent elections as a cause for concern. However, it's important to note that these are educated guesses at best. Predicting the exact timing of a stock market crash is an elusive goal, even for seasoned experts. In terms of market volatility, the jury is still out. While some experts see current fluctuations as part of a normal cycle, others view them as warning signs of an impending crash. These indicators give us insight, but they are not guarantees. They help us stay informed and make educated decisions, but they can't predict the future with absolute certainty. The stock market is influenced by a myriad of factors, many of which are unpredictable. So while it's important to keep an eye on these indicators, it's equally crucial not to panic. Let us further explore. What are the experts saying about the possibility of a crash in 2024? A question that's been on many minds lately, so let's dive into it. Some economic experts are ringing alarm bells. They're pointing to high levels of corporate debt and an overvalued stock market. They argue that we're in a bubble, and like all bubbles, it's bound to burst eventually. These experts are warning of a correction, which could turn into a crash if not managed properly. They believe that the market's reliance on low interest rates and easy money policies can't go on forever, and the end could be nigh. On the flip side, we have a group of experts who are more optimistic. They argue that the fundamentals of the economy are strong, unemployment is low, consumer confidence is high, and corporations are still making profits. They believe that while the market may be overvalued, it doesn't necessarily mean that a crash is imminent. They point out that market corrections are a normal part of the economic cycle, and while they can be painful in the short term, they often lead to healthier markets in the long run. There are also those who fall somewhere in the middle, who believe that while a crash is possible, it's not a foregone conclusion. They argue that the outcome will depend on a number of factors, including government policy, corporate earnings, and global economic conditions. They stress the importance of being prepared for any eventuality, but also caution against making rash decisions based on fear and speculation. In essence, the expert opinions on the possibility of a stock market crash in 2024 are as varied as the experts themselves. Some see danger ahead, others see opportunity, and many see a complex situation that could go either way. The experts have spoken, and their opinions vary. But what does this mean for you? Well, that's a question only you can answer. But remember, knowledge is power. So stay informed, stay vigilant, and above all, stay calm. The world of finance is a roller coaster, but with the right mindset and strategy, you can ride out any storm. A stock market crash doesn't just affect traders, it has wide-ranging consequences. When we talk about a stock market crash, we're not just talking about numbers on a screen, we're talking about a seismic shift that can shake the very foundations of our economy. Because the stock market isn't an island. It's deeply intertwined with the broader economy, and the ripples from a crash can be felt far and wide. Imagine, if you will, the domino effect. A crash could trigger a downturn in the economy, leading to job losses and reduced consumer spending. Businesses, large and small, could face a challenging environment, struggling to stay afloat amidst reduced demand and tightening credit conditions. The real estate market could also take a hit, as people may hold back on buying homes in a shaky economy. But it's not just the big picture. A crash can have a direct impact on individual households too. Many of us have our retirements tied up in the stock market. A crash could wipe out years of hard-earned savings, leaving people to question their future financial security. And let's not forget the psychological impact. The fear and uncertainty that a crash brings can lead to stress and anxiety, which can have serious implications for people's mental health. So, what do the experts say? How can we prepare for such an event? Diversification is often the first piece of advice. Don't put all your eggs in one basket. Spread your investments across different asset classes, sectors, and geographical regions. This can help cushion the blow if one area of the market tanks. They also recommend building up an emergency fund, enough to cover living expenses for 3 to 6 months. This can provide a safety net if the worst should happen. While the potential impact is significant, remember that a crash is not a certainty. We can't predict the future with absolute certainty, but by understanding the potential consequences, we can take steps to mitigate the risks and safeguard our financial futures. So, is the stock market going to crash in 2024? The answer is not as straightforward as you might hope. We've journeyed through the current state of the market, analyzed various indicators, and considered economic forecasts and expert opinions. All these factors paint a complex and intricate picture of the financial landscape we're navigating. While there are potential indicators suggesting a downturn, such as inflationary pressures and geopolitical uncertainties, it's crucial to remember that these are only pieces of a much larger puzzle. The stock market is influenced by an array of factors, many of which are unpredictable and beyond our control, like sudden changes in government policy or unforeseen global events. Moreover, we've delved into the potential consequences of a market crash, underlining the importance of preparedness and adaptability in the face of such challenges. It's a stark reminder that investing in the stock market is not a guaranteed path to wealth, but a journey fraught with risks and rewards. In conclusion, 2024 may or may not bring a stock market crash. The future is, after all, unwritten. The best we can do is stay informed, make educated decisions, and be ready to adapt to changing circumstances. Stay informed, stay prepared, and remember that the stock market is a long-term game. Until next time, keep your eyes on the prize.